Conference will now be recorded.
All right, good day, everyone. I am Steve Szymanski on behalf of Wealth Foundations Northwest. I'd like to welcome you all to the weekly prepper, getting you ready for the week of January 26th. If you'd like to learn more about what we do, check out our website or email me directly. I'm happy to give a complimentary coaching session to anyone who contacts me if you want to talk about what's right for you and for your trading style and that sort of thing. So just a quick reminder that your trades are yours, not ours. We don't act as advisors in any way, shape, or form. Trading does involve risk. So doing our normal schedule this weekend next, as far as the eye can see. All right. So last week, markets dropped early. A little bit of consternation over Greenland, and then they sort of recovered. This kind of thing about maybe not using military force to take over the country kind of sounded good to the markets. Metal still rocking despite rate cuts and mostly positive earnings. Netflix disappointed big time, but it's just not the market mover that something like an Nvidia would be. But 3M and SLB were positive. Overall, performance kind of mixed. Not a huge rebound for the Qs, but I didn't not see this coming. I thought that the Qs maybe were done dropping for now. I'd be watching them to rebound. And the Russell took a break as well. Gold just in fuego, won't stop. Bitcoin not following. So the kind of the risk off trade seems to be all about gold right now, and silver also right there with it. And so, sort of a mixed bag, both in the world of infotech, where Meta and Microsoft and Tesla were strong. So was Micron and AMD, and the others not at all. And just hit and miss throughout other sectors. Healthcare relatively decent. Eli Lilly up 3%, ExxonMobil up 4%, Costco and Coca-Cola. It's interesting that Coca-Cola is up 3.4%, but Pepsi down 1.36. Who's winning the cola war? All right. So 1 week performance, basic metals and energy, consumer defensive kind of rounding up the top, and financials took a breather. I don't think financials are bad. I really don't. I just think they took a breather after their earnings. And but for the month, energy, basic materials all seem to be winning, and even over the last 3 months. And so, look ahead, still in a bull market. Volatility may be increasing. Watch for tech AI to rebound, but I'm cautious on that. Okay. I just think that, I don't know, I just don't see them sagging too much for too long. There may be other strong sectors in the meantime, so just watch for the strong sectors. Could be energy, could be healthcare, could be anything, but watch for a tech rebound coming soon to a neighborhood near you. Possible market movers. Consumer confidence on Tuesday, not a huge one. FOMC on Wednesday, they're not going to do anything. And PPI on Friday. So I think it's going to be a relatively quiet week. I really do, despite the FOMC on Wednesday. And key earnings, some big names: Microsoft, Meta, Tesla, Apple, Visa, Mastercard. I love trading the credit card companies. I just do. More than I love being one of their customers. I mean, I love trading them. And strong. I expect energy to hang in there, and materials and healthcare and consumer. I think will all be strong. Consumer staples. It's kind of depends on how the market sentiment goes. If the market sentiment is weak, then staples will be strong. If not, it won't. And so, kind of moderate in there is real estate, communications, basically everything else, including tech. So watch tech. Watch tech to move from moderate up to strong. And there's really no major league weak sectors right now. That's why I'm kind of thinking it's kind of a bull market. All right. So let's go ahead and take a look at I'm going to pause the recording while I pull up our.
This
All right,
conference will
so
now be
pulling
recorded.
up our model portfolio, man, we're crushing it. We're up 17% year to date. in the first 25 days of January. Man, we're killing it. So let's look at these one at a time. Dell. Dell, we're playing to the put side. Let's check it out and see if we should stay that way. Kind of a, I think this one is sort of a, yeah, this is sort of a boing boing. Look how it's sort of stair stepping down. And all it has to do is maybe come down to about here. And I think we'll probably take profits. It's a relatively short term trade, and it is not broken at all. Look how that diagonal trend line is still very much intact. It's trending down. If you're not, in fact, if you weren't even in this trade, you might even still want to get in. So Dell looking very good. Just needed to take that next leg down. Gold, if I can't even keep up with the gold trade. We are short the 450 call now to March. So we're just going to do it as a bull call spread at the moment up to 450 GLD because I got tired of rolling this thing up and out, up and out, up and out. Now all it has to do is stay above 450 between now and March, and we're going to continue to print money. If it sags at all, gets drops. We're $8.75 in the money on our bull call spread, and the longer we sit in it, the more money we make. And if it starts to come back down, then we'll kill it. Okay, but we're going to make a lot of money. Gosh, who knew to get long gold? I did. And so you get to come along with that. So good for you. That's a win for you, right? Google also holding up very nicely, selling calls. We're short the 340 call. Let's see how that is doing. See if we need to take any action on that. If that gets above 340, we probably need to take some action. But 340 is up here. No, we're good. We're good. This is doing pretty much what we want it to do. We're going to keep cash flowing on the shorts, let those expire, and just sell, sell, sell. And meanwhile, our long keeps gaining value as well. So we make money in the shorts, make money on the longs. Life is good, and it's a nice, boring trade. If you like boring, Google's been good. If you like boring, profitable, you'll really like Google. And here we go. Oil service is another one where it's going so well, I almost can't keep up with it. In fact, I could roll this long up and take a bunch of profit off the table if I want. I might just do that this week, not right this second, but look at that. Oh my gosh. It is I just can't keep up with it. And I keep rolling higher, rolling higher. It did come back down. So it reached a high of 353, then came back down. That's good for us. We don't really need it to go above 340 at the moment. In fact, that's a gift that the market just gave us because we could take that short and out to March. So let's just roll it to April and create rolling order. And we could just to kind of keep it, give us a few dollars of room to run, just not much. I mean, just go up to 345 April and not get too greedy, right? And we could take a $200 credit on that. And I'm going to go ahead and take that, confirm and send. And just keep printing money on those types of things. And man, we just called that one. That was awesome. TD. All right. So this is a financial stock, but it's not a U.S. financial stock. It's a Canadian stock. And who knew? Who knew that it'd be a good idea to trade a Canadian stock? Well, I did, because that's just behaving so nicely. And it took it's got a little cup going on here, and we're going to be short up near there. Let's just check that detail right there. 97.5 is our short going out to Feb 20. It's basically a bull call right now. We could probably take profit right now. I might even just trail stop this because it's going to come up into this area here. It might resist a little bit. It could keep going, but it might resist. In case it resists, I think I might put a loose trail stop here. Pretty much lock in a win is what I'm kind of looking to do here on a not very expensive trade. So let's just do that. So let's go control and create closing order, and let's just close that vertical spread, and let's do that as a trail stop. Is it liquid enough to do? Yeah, I think so. Let's just put a trail stop on that spread, and I'm going to give it, about 40 cents. So give it some room, give it some wiggle room, and if it starts to come down hard, we'll be out. We'll be out with a profit, I think. And trail stop mark, good till canceled. All right, trail stop, good till canceled on my bull call spread. Let's go ahead and confirm and send it. But yeah, that stock looks really good. It looks even better as a horizontal spread, but I'll take it as a bull call. It's kind of lower touch trade that way. So XBI Biotech. Again, this is a bull call spread, and is the short already in the money? In which case, I might just take the profit, because there's not a lot of time left on this one. XBI. Oh, look at that, break it out beautifully. Then it pulled back, but I think our short is still in the money. So as long as we stay above 130, and currently we are at 128. Okay. So let's leave it. Let's just leave it alone. See if we can pick up that extra $2. But even if we killed it today, it'd be profitable. So another really good trade. And XLV. XLV, it's not a boing boing, okay, but it is something that we are just long on its own, and we could probably sell a little something against this. It's just sagging just enough here that it just popped up and then sagging a little bit. I would love to sell a 160, bring in a little cash flow at the 160 level, and because we could sell that, February, something like that. Let's just do that. Let's just go trade XLV. Um, I'm not really thinking super short term. I'm thinking like February, and sell the 160. And if we can get, oh my goodness, look at that. Look at the wide spread on that. 140 by $3. What do you do with that? I mean, that's the monthly. That's, all right. So if they give me 220, I'll take it. I mean, how do you turn down 200 easy dollars? And so let's go ahead and confirm and send. Yeah, if they'll give me 220 for that, I'll take it. And just out to Fed. And we'll see. We'll see if that fills. Now, in terms of new stuff, all right. So there's some interesting possibilities. First of all, market commentary, general market commentary, just looking at the technicals, looking at the chart. Our purple predictor is surging here on the SPY. And so we had lower lows and lower highs until recently. Then, boom, big surge up. And, it's, so this is, why does it say, oh, what's this weird number? I don't need that. I don't need the logarithmic. That's weird. I just want the number. Okay, so the number is 689. Okay, so 689 is the number, and I'll have to fix that later. This must be Steve 2. Yeah, let's go to Steve 3. Steve 3 will give us the number. Steve 3. There you go. On SPY. Let's go back to SPY. There you go. So I got multiple things going on here. So that's 689, and I'm kind of curious as to what this level is, where it might run into a little bit of resistance. Around that 695 area would be kind of the 696. The Ruther Freeway number would be right there at the high. Right there at the high. This around the 690, I don't know, 696-ish area. And so I think it'll get there. I think it will. And the Qs I don't think it'll look as good. I think the Qs are kind of floundering a little bit, but look, see if it hits that area, that 630 area, that's fine. But then you've got this other resistive area up here. So even if it does get up there, so if you're going to play the Qs, I would just like try to scalp a little bit. You got about a $10 move here, maybe less, maybe an $8 move here from 622, 623 up to about 630. I think there's room for a bull call spread in there, maybe, if you're feeling overall bullish in the market, which I kind of am. And gold is just outrageous. I keep waiting for gold to pull back and it just won't do it. So that's okay. We're already in it. So I want to buy more. Costco is something I'm interested in. This thing has been in fuego. So the question is now it's coming off low on the curve, right? I mean, talking about a change in tone. Talk about a change in tone. If we were to look how the 20 just sliced right above the 50 right there, and it just won't. There's no quit in Costco right here. Yeah, I don't want to chase, but I mean it came off that bottom so well. And it's not like I didn't see it coming. I just didn't get on board like I wanted to. And now I'm kind of like not I don't like it when it goes, like parabolic like that without a break. And I'm going to watch Costco. I'm not sold on whether I should jump in right here or not. So if we just want a simple boing boing, okay, simple boing boing with earnings not too far away. Earnings on the 29th, it doesn't give us enough. Usually I would want to go 2 days out on that. That's all right. We got plenty of other opportunities. Let's look at Schwab. No, Sherwin. No, I don't care about Sherwin Williams. EA. No, that's too lame. MS. There you go. Thing is, not bullish enough. Okay, this thing has gone sideways. It's past its earnings. I like that, but it's just not bullish enough. I need something to show me a little bit more spark. STZ. There we go. STZ. Now there's a point going. There is something that's got a lot of upward momentum. Took a little bit of a breather. And that's the kind of thing I'm looking for in Costco. I want Costco to take a little breather with a little capitulation there. Now, that is a classic boing boing. Run up, a little bit of a pullback, drags the 2-day RSI below 30. And all you do is just buy a call on that and then wait for it to bounce above RSI 70 and you scalp a little bit there. So let's go ahead and do that. Trade STZ. And we'll just take a standard boing boing trade out to February is getting a little bit too close now. So let's go March monthly. You can pay a little bit more, but it's worth it. So Delta, gotta obey the rules. The only thing that fits in that 35 to 45 Delta is the 165. I can get that for about $4. Let's just take that. Just one contract. I'm going to take it. I'll take it at the natural. It's not a big spread. Just one contract. No big deal. So I like that trade. STZ, boing boing, bullish boing boing. And, the airlines are kind of interesting right now. Let me show you the airlines here. Jets, they're kind of pulling back, but within the context of bullishness. You see that? So I don't care if you choose love, or Delta, DAO, or UAL. No, I can't buy UAL. So, so it's not that great on a couple of these. It looks like if I had to pick one of these three, I would definitely take Southwest. And really, I kind of like the ETF better. The ETF looks a little stronger than the individual ones I just looked at. And then you don't have to worry about the earnings. But it's too sideways to take a boing boing. So don't love it. All right, so let's think bearish. Spotify. Now there is a boing boing if I ever saw one right there. Bear boing boing. So within the context of this downward momentum, this thing took a bounce up and capitulated. No earnings or anything pending. So let's go ahead and take a bear boing boing. We're staying within ourselves. That's why we're winning. We're not getting too crazy. and just pick up a boing boing here and there, channel breakout there, maybe a little bit of a horizontal spread, and we're staying within ourselves. So find a delta 35 to 45. We could go with look at that, the 500. Don't you like round numbers? I love round. The problem here is it's so expensive. I mean, you want to throw 2,700 at a trade with a wide spread. Man, I can't do it. I love the trade. I would love to go bearish on Spotify. It's just too expensive. Is there another way I could trade that? Yeah, maybe. Maybe with maybe trade that as a bear put. You know, how much would that cost as a bear put? So if we look, if we just want to, we'll take it's a boing boing signal, but we're not going to trade as a boing boing. We're going to trade it down to. We'll trade it as maybe a 510 490. 510 490 bear put. 510 490 bear put. If we did that, then it'd be a whole lot cheaper. So buy the 510 put and sell the 490 put. So this is the beauty of options right here. And sell the 490 put. And that takes all the starch out of the cost. Okay. I always forget to hit control when I do that. So control. All right. So that's only $900, folks. That's cheap as it gets. And we'll take it at the mid, maybe pay a little bit more than the mid. That's about confirm and send and send. Yeah, so for $900, we can play this to the bear side. We're already long Google. That's one of the key IBD swing trader things. Lily interests me. Let's just take a quick look at Lily and see if I can fashion a trade on this one. This is one that interests me. Yeah, nope, not today. Not today. It's just not good enough. We can do better. NEM. Oh, KTOS is one that's bombing. NEM, we kind of missed it. KTOS. Man, that is a boing boing. Here's the thing. This is a tricky boing boing. It's an aggressive boing boing. But look, we're down 3 hard days in a row. But see how the candles are getting smaller? See how the volume is dropping off? And then we're down in the dirt on the 2-day RSI. I'm taking this as a boing boing. I'm just taking. I trust KTOS here, and I'm going to do it as a boing boing. I'm going to buy a call. Delta 35 to 45. I could go as expensive as 120, or I could go as cheap as 130. I like, ooh, man, look at the spreads. I can't do it. Not with those spreads. I could do this. I could do the 120 because the spreads aren't so bad. Yeah, you get down here at the 130 and they get really bad. So, all right. So the only one fits the rules with decent spreads. I can live with an 80-cent spread, especially if we put it in at the mid or halfway to the mid. I'll meet the market maker more than halfway, right? But I like that trade, and I think that all that momentum is taking a breather, and I think it's going to pop back up. And I think that's enough for now. And so on behalf of Wealth Foundations Northwest, it's been my pleasure to have been your coach today. Good luck, good trading, everybody. Take care. We'll see you next time. Bye-bye.